Hello, ladies and gentlemen. It's a modern investing on Pod TV. My name is Sasha Star, and I would like to introduce our distinguished guest for today. It's Dr. Milan Sombarak. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
Always my pleasure. Jim Ida from Ida Foundation. Welcome to the show, Jim.
Thank you for having me, Sash.
And also founder of the network, Nick Paliveda. Welcome to the show, Nick.
Hey, Sasha.
Yeah, always great to have you as well. So, you know what? I was thinking about something interesting for today's show. No, first of all, market is doing its thing. It's climbing the wall of worry. Yesterday dropped big time, 700 points or so. Now it's trying to rebuild, and we'll see how it will do today. So far, it's in a plus territory, but not very convincing. However, I think we will end up in plus today. We'll check it in a few hours, but my conviction is that it will end up in plus. Then there will be a reporting of Nvidia, which is one of my favorite stocks. There are now a huge fight between pundits who say that Nvidia will not be able to report good earnings because of so and such factors. Then there are others saying, "Oh, hell with you." Nvidia is Nvidia, and the usual laws don't apply. However, I want to mention something very interesting. Just a week or so, yeah, probably a little bit longer than a week ago, Nvidia traded at $230 a share. Now, if you would held a stock, and you would then, as I was trying to explain, when stock reaches certain number and it's not going higher, but it's going rather down, you sell as it will lose 7% of its value. So for 230, what is the 7% of 230? It's 2 by 7, 14, 3 by 7, 21. So it's about, give or take, $16. Okay. So at 214, according to this rule, you would sell. And then you could buy back yesterday and day before yesterday, or even today. You can buy it at what is it, trading 208 or something, and so on. So you would not write it all the way down. However, for Nvidia, I would make exception to, instead of 7%, have it at 10% because of the beta, because of the volatility, because of many other characteristics that make Nvidia not your usual stock like General Motors or some others, but something else. And so special exception would be applicable. So what is the 10% of 230? It's $23. So if you subtract $23 from 230, you'll have 207, and that's approximately where it's trading right now. I think it's 208 last time I looked at it. But earnings, that will make it or break it, and we'll see it in probably 3 hours or so. Okay, we'll go for it anyway. Now, I wanted also to say today, overall, this is a financial program, and center point of this program is trying to figure out what is the best way to make money. And I wanted to ask everybody's opinion why money is so important. Milan, let's start with you. You know a little bit about money, and your opinion would be very, very valued.
Well, there's only one thing that money cannot buy, and that is poverty.
What about love?
It may not be the best thing there is, but it is way ahead of whatever is in second place. So, it's been shown that if we have an average income, and roughly it's around $70,000 per family, and we can meet our expenses that way, we have a certain level of happiness. But if that $70,000 is doubled, our happiness level does not go up at all. However, if that $70,000 level drops, then it starts to hurt. And then all we can think about is money. So question for you, Sasha and James and Nick, is how much money is needed to retire comfortably? What do you think, Sasha? How much money do we need to retire comfortably?
I think $3 and even $2 million will do.
Okay. James, what do you think?
Well, I would say 3 is the minimum.
Okay. And Nick?
It depends, of course. Okay, now, see, and the reason it depends on your income and income replacement, which we do a lot in our pension company. And it also depends on interest rates, okay? People don't realize this. And I can give you an idea on interest rates. Back in the 1980s, when I started meeting clients that came in with $1 million portfolio, I said, how you doing? Well, I have $1 million at 10% in my CDs. I make $100,000 a year. I'm pretty happy.
Okay.
Today, well, 2 years ago, I met the same person. I got $1 million and I'm broke. I put it in my CDs. I make 1%. I make $10,000 a year.
Right.
So the answer is it really depends. So interest rates make a big factor. The last time we reviewed the income replacement of $245,000 income, which is the maximum considered compensation under ERISA, you needed approximately, Milan, $3.5 million. So I would say that if you're looking to replace an income of around $250,000, you need $3.5 million. But then you just said, well, the average person makes $70,000. What's the income replacement of that? Well, it's not, it's obviously it's half and then some. So it really depends on what you're used to.
Well, you're right, what you're saying, Nick. And what Sasha said and what James said actually is right in line with a Bloomberg survey recently stated. The Bloomberg surveyed people around the globe and asked them how much do you need to retire, and the average number came in somewhere between $3 to $5 million.
Yeah.
Interestingly,
That would probably be close to correct. Yeah.
the median net worth in the United States is $120,000. There's obviously a huge disconnect between what people think that they will need and the actual number who can pull it off.
Yeah, well, what we said, there is a retirement planning gap, which we know is out there, and it's much bigger than people think. But remember, we're so skewed, at least in the United States, Milan. Study was done, 70% of our population in an emergency can't get a hold of $1,000. Now, that's not a very good thing. But part of it also deals with financial education. Who's spending money, $400 for a ticket to go watch Taylor Swift or Beyonce? Are these the same people who are crying that they can't retire? Well, this is a problem that we have with financial education. 70% of our population should not buy Beyonce tickets, not buy Taylor Swift tickets. It just doesn't make any economic sense, and certainly shouldn't go to football games. So, but our financial education in this country is so poor, it's not even funny. That's the reason I really like books like The Millionaire Next Door, which kind of explain the roadmap if you want to be successful financially. The other thing that's not explained, and this is just one of my gripes, recently somebody said, oh, we should only work 30 hours a week and be just as productive. Well, that's if you eliminate unproductive activities. But here's my empirical evidence. If you want to be successful, all the successful people I work with, all of them, and I'm talking about people that make $500,000 to $1.5 million a year, which are decent incomes, work 80 hours a week on average, Milan. Yeah. They do not work 40 hours. So they make, they say, well, I make $200,000 a year. Really, it's $100,000 a year for my first 40 hours, another $100,000 for my next 40 hours. That's how I make $200,000 a year. And what they don't explain, and media is horrible about it, so is certain parties, which I'm not going to name here politically, that if you want to be successful in this country, you have to think about working 80 hours a week, even if you're making a lot of money, but to make more. So that's my empirical analysis. People don't want to hear that news, but I can go client after client after client, okay, that make $500,000 to $1.5 million a year. Almost all of them work 8 hours a week during their working years. Not when you get older like us.
You're talking about your
when you're younger, You tell me, Milan, you didn't work 80 hours a week when you were young.
You tell me who your clients are. Are your clients factory workers?
No, you're not. They're doctors, lawyers, architects, engineers, professional people, independent business people that own their own businesses.
Okay, so what you're saying is that they lack financial education, and that's true. Dentists are among the highest earners in North America, and yet
I have quite a few.
over 90% of them cannot afford to retire at age 65 and maintain their lifestyle because
Right.
they spend as much as they make, they spend more than they make. And so they lack financial education, which is something that ought to be a part of education. And so you're quite right about the fact that we lack education.
I
Yeah.
think financial education has to be presented and sold in somewhat different way. I'll tell you which one. For example, you know that the chess players, this is a sort of exclusive
Group.
section of a society where they are prosper, not only in chess, but in other endeavors, most of them at least, through a few important things such as recognition of patterns, ability to learn, ability to memorize, and a few other factors. I'm not going to name a few. But what is the most important thing? It's not just chess players, but I will go back to chess players in a sec. I would like to understand, to present to people, in the case of better financial education, that almost all your life depends on how successful financially you are. Because not only you have better lodging, better food, better access to medicine services, medical services, and so on, but the most important thing what people overlook, you have access to much better selection of females, potential wives, girlfriends, or so on. If you're very successful financially, they are going to actually try to jump to your bed at first available opportunity. And if you are not successful and you are down the drain somewhere, you will have very, to put it mildly, but very, very limited access to.
You're speaking from experience here, Sasha, right?
Hold on, but I just started. Wait a sec. But that means that if you are so successful and you have much better selection of females, partners, whether it's wives and so on, your kids will be somewhat made from a different material. They will be potentially way much more successful in life, and they will have access to better education and so on. And this is unique on our programs in the morning. World edition, we have so much arguments about that these people are not treated fairly, and those people are not treated fairly, and these people are better equipped to go through life successfully than some other people, or so on. But everything is being explained so easily. So the more you're successful, the more material success you have in life. You have better food, better lodging, better wives, better kids, better food, better just medical services, everything. It's all a huge package. So when you are talking about financial education, that's your first step.
It should be your first and mandatory course in the United States of America.
Absolutely.
But, you know, Sasha, I went through a lot of formal education. I can tell you that it was like they were worthless. I mean, you know, most of the stuff that is taught in elementary, middle school, high school, college, university, law school, MBA school, worthless, not very practical. The CFP program is actually pretty good in the United States, College for Financial Planning. That is actually worth getting and should be mandatory in all our schools. But the thing is, our financial education in the United States is unbelievably horrifically low. And you're absolutely right. Also, there was a study actually done by university professors about happiness, and they graded based on income. People that were making less than $25,000 a year were almost always miserable. People making more than $500,000 a year were almost always 100% happy. Okay, so even though they say it can't buy happiness, it does buy what you're saying, options. You have options, what schools you go to, what plays you go to, what countries you want to travel to, how you want to travel. I mean, your options just
This is the key, Nick. You're hitting the
you're
key.
rich. That's all I
It's
can
absolutely important to have the power of choice.
You have the
That's
power of
tied to happiness.
Yeah,
And-
absolutely.
And when you have more financial resources, you have more choices,
That is correct.
and
Right.
you feel like you have more freedom.
Right.
And when you do not have these choices, you feel constrained. You
Yeah.
cannot get what you want, and you know you can't get what you want, and you're unhappy.
Yeah.
So there is an important thing. But Sasha, to go back to your original question, I think, money is not important unless you don't have it.
Yes, yes, yes.
And, I've been on both sides of this, and there's no question that once you get money, and often when you get money, you can't help but continue to make money. But this doesn't necessarily mean happiness, but it gives you the power of choice in so many ways, which leads to a sense of empowerment, which is tied to your own personal happiness. So you're hitting on the key, Nick, I think, is that this is not necessarily money that makes you happy, but it's the choices that it allows you to make.
Let me rephrase it. The Russians are saying this way: money isn't the most important thing in the world. It's quantity.
Right? Because everybody has money. The only question is how much they have.
Absolutely.
But back to our education system. See all those books, right? It really is very, very poor. I mean, if you were to grade the financial education system in America, probably an F or maybe now a D, D plus, because some schools are requiring basic fundamental financial education. But the rest of the whole education system in the U.S. is out to lunch.
Well, even English, writing, reading, and math, we're not doing a very good job, let alone finances.
Yeah, right. I know, but you have to add personal financial planning.
Yeah.
And one way you could do it is take the CFP program and bring it into our schools, which I think is just absolute good idea. They actually do have it in some universities right now because it is actually a good course. In other words, it teaches people what they need to know about finances. But right now, the United States is F, and it's reflected also, and you can see the stats. 70% of our population, 70% can't get a hold of $1,000. Yet at the same time, Beyonce and Taylor Swift tickets sold out.
Yeah.
Now,
don't hurt our ratings, Nick. I'm going to pull my Tucker Carlson card and hurt our ratings by going against Beyonce.
Look. If you're saying, well, I've got 10 million in the bank, I want to go to see Tucker Carlson.
Yeah.
Okay. You got 10 million in the bank. Go ahead.
Go
okay.
ahead. Yes.
You probably won't miss it. But the people that are living paycheck to paycheck, this is ridiculous. They should all say no. No to Beyonce. No to Rihanna. No to Taylor Swift. No.
Well, this is personal discipline that you're hitting on, Nick, which is again not taught. And
the media doesn't even help it. When they first came out, Jim, they're all saying, "Oh, look how great it is." Nobody in the media said, "Time out. Look at where you're spending. Don't go." No one said that. And somebody needs to speak up and say, "Don't go." And by the way, I was guilty party. I was going to take my grandkids to see it. Then at $400 a ticket, I go, "Okay, that's a couple hours, $400. I got 3 grandkids. I'm gonna blow $1,200." The millionaire next door knocked on my head and said, "No, you don't do that." Okay. So the thing is,
I was in New York City and the Red Sox were playing the Yankees. And I thought, I used to go and watch them for, just less than $10. And so I thought, maybe I'll take in a game. The tickets were $200. Now I could afford $200, but I just on principle said.
The millionaire next door says, "Don't do it."
Yeah, no way I'm doing that. That's ridiculous. That's price gouging.
Well, I mean, that's the reason I like Bill Denko's book, because the thing is, I have to refer to, okay, this is in front of me. What would the millionaire next door do? Because the millionaire next door makes the right decisions. They go, "Don't go. Take your $400, put it into NVIDIA stock. Okay, you can only buy a couple shares, but you have a better chance of watching that grow than you will having 2 hours of Taylor Swift." So I was,
money fits right in with Maslow's hierarchy of needs.
Yes.
It's much like air. For instance, we never think about air when we have it. We never think about money much when we have it. But when it's lacking, say you're underwater, all you can think about is air. When you're money, all you can think about and talk about is money. So it fits right in Maslow's hierarchy of needs. Yeah.
Mm-hmm.
But I don't want to leave the impression that if you work harder, you make more money. And because I was lucky that I was with companies that were successful, and so when I got stock options, they turned into something. someone working just as hard as me could have been working for a company whose stock options ended up being worthless. And so, there is a certain amount of luck involved.
That's true.
But we can also look to the Scandinavian countries and some Western European countries, and they are providing a balance between a good life and how hard you have to work for it. And that is including in retirement. There are more benefits for these people when they retire. And here in this country, in the United States, and I think in Canada as well, you're on your own more. And so then you have to be your own advocate, have your own money to fall back on, because there aren't enough resources out there to rely on.
You're
You have to
talking,
rely on
you're
yourself.
talking, James, about the role of luck. Among the world's refugees, and there are millions of them, there are many who are just as capable as the people of the four of us on this show, except they had some bad luck and they wound up in the wrong place at the wrong time. Now,
Right.
Sasha was talking about the type of thinking that chess promotes and how useful that can be in making money. I know of an international master who did not finish public school, although didn't finish grade 8. He recently sold his company for $20 million profit. Now, would he have been able to do that if he had a formal education? To what extent is Wall Street, with its conflict of interest with Main Street, responsible for the poor education? Because correct education is against what Wall Street wants. They want us to be fully invested. They want us to be actively trading. They want us to do all those things that benefit Wall Street, which really hurt us economically. To what extent is Wall Street responsible for the poor financial education that we're receiving both in Canada and the United States?
Great point.
That's an absolutely good question.
I wouldn't go that far. I think all Wall Street is interested is to separate investor from his or her money. That's all what they're interested. And it's done very simply. If let's see stock, let's see even Nvidia goes say to 230, and let's see that they will drop it back to 150, right? You know how many people will lose and how much money? And they will take all its money, and in next few months it will be back to 230, maybe it will go even 250 or higher. But in the meantime, so many people would lose so much money. And on the other end, when you're forced to sell because of margin call, because it just inflicts so much damage in your portfolios, you just want to see, you don't just want to see it anymore, okay? So you're selling. Who is on the other end of the trade? It's Wall Street. It's a market maker. It's somebody.
Yes, yes.
There was a good movie on that, Sasha. I'm sure you've seen it, called The Wolf of Wall Street.
Yeah.
Some of the decadent parts, but if you got rid of the decadent parts, and it's a true story at Stratton Oakmont. And from my limited experience working with people in New York for about 5 years, that's how they think. I'm going like, okay, I got that. Another good one, of course, is the movie Wall Street. It's actually pretty good as well. And, the Pursuit of Happiness. I think that's a good movie. And Enron, The Smartest Guys in the Room. Okay. That is also a very great movie. It's not as decadent, but it's a true story about corporate greed and Enron and what they were doing to that company and building it, bilking it, and destroying people and people's lives. And there's no recourse on it. So, Wall Street, I agree with Milan. It's a tricky place to be, and there is a major league conflict of interest between you and your financial advisor the minute you sit down. Okay, so the more you know, the better off you're going to be. There's absolutely no question about it.
I think you have to eliminate words financial advisor from your vocabulary once for all. You just not need one. Milan demonstrated many times.
Here's the reality, though, Sasha. Okay, because I do have a lot of dentists and doctors who are clients. I think the health profession represents about 50%. They got no training in investments or retirement plans or anything relating to it whatsoever. So they're almost forced to rely on other people for their advice. It's a really sad commentary, but they walk in our office all the time, every day. I have another meeting today, and they don't know anything. I mean, zero. So it's almost like you got to get them from here to there. So they have to depend on their financial advisors because they don't know anything. They never got in college. I don't know, Milan, did you take financial planning when you were in?
Northwestern University used to have a dental school, no longer does, but this dental school offered an MBA to dentists who finished their dental program, a 1-year MBA, particularly applying to running a dental practice, which of course applies to life in general. It no longer does that. So now there are no dental schools which offer any education in financial planning. I wrote a letter to the dean of every dental school in Canada, offering to provide some education. One of them responded and turned me down. The others totally ignored
you.
Because it isn't clinical dentistry. They're there to teach clinical dentistry.
Right. Yeah. Well, for 12 years, I've been the adjunct professor for the graduate tax program, Northeastern University in Boston, lead faculty for retirement plans. So part of my thing of doing research on the area, I went to all the MBA schools in the United States to see whether or not retirement planning was taught at University of Chicago, Yale, Harvard, Stanford, and came up with this conclusion. You can go look at yourself, do your own research. They don't offer one class at the MBA level for qualified plans in any major U.S. MBA program. It was very, very sad. So if they don't offer it at an MBA level or even at a law school level, how could you expect somebody to go to medical school or dental school have any conclusion as to how much, the question, which is basic, how much you need to retire, which you can actually do mathematically to what they call actual equivalence, which we do all the time. They don't know anything about it. So that's the sad commentary, and you can do your own research on it. That's not taught in any major U.S. university.
Well, Nick, I will say, the Mechanics Institute in San Francisco.
Yes, of course, the Chess Institute. And
for chess reasons, but
right.
It's a library as well.
Right.
And I worked for Charles Schwab a block or two away from it.
Yeah.
And I would go there not to play chess, but to study. Like they had all the value lines and Morningstar.
Value line.
And so I taught myself. And that's one thing that I tell people is don't wait to be taught, teach yourself.
Good point.
And this is the kind of thing that I think it ties into what we don't expect. We expect to be given these things or to be able to sign up for a class or whatever. But, there is the opportunity to teach yourself as well.
That's true.
Go out and get the resources that you need to educate yourself.
Excellent point. And that when I learned to play chess, I basically taught myself.
Yeah, we all did our age. Yeah.
In our age, there was no chess coach, no computers.
No.
So there's a lot of Batsford's book back there, the Batsford series and all those openings.
Yeah.
John Nunn's openings, all that stuff. I just taught myself and read a lot of the books. But you're right, that is an option. But schools don't even teach you to teach yourself. They don't. They don't say. One of the most important things to do. If you really want to learn a subject, you get serious about it.
Learn how to learn.
Learn how to learn, right? They don't teach you that either.
Today, it's easier today than ever before. Sasha, you're a musician. You had a music teacher somewhere along the line.
Yes.
And I played the violin, same thing. I had a couple of music teachers somewhere along the line. Today, it's so much easier to take a piece of music and listen to any performer in the world performing it and study how they do it by bringing it right into your living room. It's much easier to teach yourself anything today, including finance.
Right. Yeah. The information is more readily available than ever.
We have 12-year-old chess masters now that are more experienced than I was when I was 35.
Yeah, well, also the computer programs are so much better. I was playing this thing called Stockfish 8, and I was going like, this is a tough program. Yes. I think I played like 20 games. I drew one. That was it. I lost every one.
Yeah.
I was going like, holy tomatoes, what they got here. So those programs didn't even exist when I was playing. No. But you're right. In financial education, there's a lot of stuff out there that is freely available on books that years ago you couldn't find out and couldn't discover. But you have to be interested and say, look, I want to teach myself.
Nick, this is a key word, interested.
You have to be interested,
You have
right?
to strive for it. People have to read as much as they can about that. And that creates a huge difference between people who are going through that and not trying to make more money, but just because they're interested.
They're curious. We have to be curious.
With curiosity, this is far the most important quality for investor, for scientists, for just almost anything, for chess players as well too. Yes. And this is a far more important than, okay, you can provide course in some university about financial planning. First of all, those who don't care, they will not attend this course anyway. To make it mandatory doesn't make sense, because
Oh,
if you're
yeah.
going to dental school, why would you be required to learn that? So essentially, they will be divided into small groups, and one group that will be very interested in that, and they will immediately advise each other what are the best books in the market, what are the best programs, and all others, they will just go to do their own things, playing video games, do just whatever. So I think you cannot impose on people. It's the same thing like people who like to eat, say, hamburger and French fries. All of a sudden, you offer them beef bourguignon, and they say, "I don't care about beef bourguignon. Give me my burger, okay? Oh yes, now I'm happy. Give me a glass of beer." You can't do really nothing with this.
Or wine. When I didn't know anything about wine, I was happy with whatever I had.
Yeah,
When
right.
I learned about wine, everything was more expensive, and I was disappointed more often.
And also,
Sorry?
you actually have to play the game. In other words, not only you have to study the books, you better open a TD Ameritrade account, put money in the market, experience the thrill of victory and the agony.
The agony of defeat.
If you don't experience the thrill of victory and the agony of defeat,
No substitute for
there's
that.
no substitute for that. So reading a book on investing is great and wonderful, but you better put some real money on the wood, make the game go good, and experience that victory and defeat.
Well, in my
All the chess books.
That's part of learning. You have to play
In
chess
my-
to get better.
in my case,
Mhm.
I've started to read the books on investing while already be on the market for a few
Yeah.
months, already making a couple of $100,000 at least.
So you
So
experience
now,
the thrill of
so
victory.
now I wanted really to explore then how it all works, what's happening really, why that stock going higher and this one is going lower. And you know what's interesting? One of the best books I ever read was I forgot the name, it's a very old book called Wall Street, or How Wall Street
Wall
Works.
Street Wizards.
I forgot. Sorry?
Wall Street Wizards.
No, that's another one. That it's talking about the most successful
Random
traders
walk.
of all time. No, this book about Wall Street, it explains how it works, who is a market maker, what's his role in the market, how he starts his day, what he's doing during the day, what he's doing at the end of the day. And all these mechanics were explored in that little book. I don't think it's available anymore because it really explains everything. How they start their day. For example, Goldman Sachs, they have one market maker for Microsoft. Only one. Nobody can trade in Goldman Sachs Microsoft stock except this one. So even if somebody else has ordered, for example, to buy Microsoft, it will go through that particular trader.
But a lot of those people have lost their jobs as they computerized all the trading. So
That's it. It was a desk, not a person. Yeah.
Yeah,
afterwards,
you
a
can
lot of those guys-
computerize. I'm talking about pre-computer time.
Pre-computer times, yeah, they had market
But
makers.
if that
Right.
how they behaved and how they conducted their trades, I'm pretty sure that computer programs are doing essentially the same thing, but
Yeah.
just faster,
Faster.
more effective.
They're bigger, faster,
Don't
better.
get tired. Don't make mistake,
Yeah.
and don't steal money at the end of the day from your employer.
That's the problem with computerized trading. They're bigger, faster, stronger traders.
Exactly. But to understand what they're doing, why they're doing, and when they're doing, that's essential because they're doing exactly the same thing what live market makers were doing.
Right.
For example, they start in the morning with, say, 50,000 shares of Microsoft and $2 billion cash.
Mhm.
Okay, now according to supply and demand, they can lower the price if there are more people want to sell, and raise price if more people want to buy. So they always keep up the balance between buyers and sellers, or so on. However, regardless what's happened during the day, at the end of the day, they must finish with the same 50 million shares of Microsoft. Now, their cash of $2 billion, it could be different. They may be very successful and they made a few $1 million, or they may not be successful and they would lose a few $1 million. But they had to end the day with the same 50 million shares of Microsoft. So then when you're watching trading during the day and you're seeing a small orders that people are trying to sell, and he's on the other side of the trade, so he's buying their small orders or so on, and then when huge orders to buy coming in, so the stock is going higher, but he's losing his stock, but he has to finish at the end of the day with the same 50,000, 50 million shares. So what that means? It means that at the end of the day, he will start buying stock in the last 2.5 minutes.
A little bit tangential, but relevant to this discussion. Sasha, I bet you read between 4 to 6 hours a day. And I bet, James, you read between 4 to 6 hours a day.
Not now. Used to be time, but not
I was a ferocious reader, yes. And now at my age level, it's less so. But I spent a lot of my days reading and teaching myself all the subjects that I wanted to learn. And I was insatiably curious, too. That's one thing that I think, could be a very arcane subject that wasn't going to make me any money. But the one point I would like to make is the viewers on this particular show we're not trying to sell you anything. Now, most of the viewers will be watching shows with talking heads trying to pitch something to you. Now, this is the kind of thing where self-discipline comes in importantly. It resists the urge to buy. It's like the home shopping network. You tend to reach for your phone to dial up and order something because you saw it. Well, Wall Street also does a great job of trying to sell. Because if you're buying, it doesn't matter. They're making money, whether you make it or lose it.
I'm so glad you mentioned this, James. I'm so glad you're mentioning that we're not trying to sell anything. Thank you.
I remember many years ago when I had a public company and I wanted to refinance it, and I met one stockbroker in Toronto, and I offered him, stock was trading at the times 50 cents a share. So I offered him a block of shares at 35 cents. So he would then next day or whatever he wanted to do, he would resell it to his clients at 50 cents, 60 cents, depends on the stock or so on. So I would anticipate that he would say, no, not 35 cents, give me 25 cents, maybe 30 cents or so on. So I was preparing to bargain with him, but I didn't anticipate what's happened in reality. He said, Sasha, I'm in the business of selling stocks, not buying. That's what he said.
Well, today, a lot of the people that are in the financial services industry, they don't make their money off buying and selling or trading. They make it they call it asset under management fees. Yeah. So what they do, as they tell me, where our design is to collect your assets, put it under, quote, management, which then they'll attach a fee, let's say 1%. We'll make money. A little fee, 1% of assets under management, okay? So as you make more money, they make more money. If you lose money, they still make money. Now, that part, there's a major investor who puts an ad saying, oh, we always do better when our clients do better. They never say, if you don't do better, okay? In other words, I'll make it real simple. You put $1 million with them, they earn 1%, they get 10 grand. Okay, your portfolio goes down to 900,000. You lost $100,000. They made 9,000. They still made money. And so what problem is that people don't get the world has changed to what they call an AUM business. And a friend of mine who I could probably bring him on this show because we played chess together back in college. Okay, he manages under management, Stearns Financial Group. Go look him up. 1.8 billion. He's a chess player. 1.8 billion assets under management. Do the numbers at 1%. He has a nice little tifty amount of money coming in through his AUM business,
which he can count on.
By the way, he was the lowest ranked player on our Pan American team. Because you're the lowest ranked chess player doesn't mean you're the most financially successful. Because immediately, two of our guys went out and they became grandmasters. 2 became lawyers, and him, who sat on the 4th board, the lowest board, he decided, I'm just going to go into asset under management when I'm like 24 years old. Yeah. Well, now he's 64 years old or 66. And he's got 1.8 billion. Do the math at 1%. And that's where the industry's headed at. And he's not the only one. There's tons of people that have AUM business. And it's a good business for the people that manage your money. So, Milan, when you want us to manage your money, let me know. Because 1%, we make money. When you do better, you'll do better and we'll do better. But when you lose money, we'll still do good. I can't say much about you, dude. You lost $100,000, but I made 9,000. That's the industry today.
And we talk about chess a lot on the show, and we talk about chess players. And I wanted to say that I started a chess publishing business, and I thought that all these chess players were so smart and they were underemployed. Well, they're underemployed for a reason, because they lacked self-discipline. One of the things they like to be in chess players is to have their time, to choose what they do with their time. And when you're expecting someone to write something or to print something or to do something for you, you kind of have a deadline. And they're not so good under deadlines.
But you know who was pretty good was Yasser Seirawan.
Oh, Seirawan, I couldn't say enough about him.
He was pretty good, yes. I
Yes.
remember the time when I
The
was an
Inside Chess was
director.
a magnificent magazine and timely analysis. I couldn't get enough of it.
Yeah, absolutely.
Shout out to Yasser.
Listen, I think we will explore chess more in our next shows. And of course, we'll talk about investments. And we just touched a little bit today. We'll watch what's happened to the market in the next couple of hours. Then we'll look at NVIDIA earnings and we'll go from there. And in the meantime, thank you so much for participating in today's program. And I'm looking forward to see you next Wednesday. Thank you very much, too.
Thank you for inviting me. Thank you. Delighted to be here.